Student, welcome back in banking class. Today we'll take new subtopic, that is under international trade. We have Export Credit Guarantee Corporation of India, which is also known as ECGC. Now, ECGC, it is a Government of India enterprise which provides export credit insurance facilities to exporters and banks in India. I have given certain important points. ECGC was registered on 30th July 1957. Headquarters is in Mumbai. Chairman and MD is Geeta Muralidhar, right? Then next is it covers risk. Okay, main aim, motive of ECGC is to cover risk. Now let us see in detail. As I already said, Export Credit Guarantee Corporation of India, that is ECGC, is a government owned establishment which was set up, okay, as I already put, okay, set up for the purpose to promote international trade in India. ECGC provides financial assistance to the exporters as well as to the importers within the country. It covers risk, okay, under the insurance policy provided by other insurance, okay, companies. Now, what are the risks it covers? Let us see. The ECGC covers risk like changes in exchange rate, changes in government policies, then about certain changes, okay, related to conduct of international trade, risk associated with commercial disturbance or wars within the trading countries, and so on. ECGC also encourages banking companies in providing financial assistance to businessmen engaging in foreign trade. That was the introduction about ECGC, right? Now student, let us move on to role, functions, or also called as importance, objectives of ECGC. Now let us take up one by one. As I already said, ECGC provides protection against those risks which are not caused by insurance policies, okay, which are not covered by insurance policies provided by general insurance company, and some of these risks may be change in exchange rate, change in government policies regarding conduct of international trade, and so on, right? So what it says here is ECGC, it provide protection, okay, only against those risks which are not covered by other insurance, meaning other policies, insurance policies that is provided by general insurance company. Like, you know, some of the insurance policy they doesn't cover certain risk, like risk change in government rates, change in government policies, okay, or regarding change in certain the process or conduct of international trade, and so on. So these are the risks which are not covered by the insurance policies, okay, provided by general insurance company. So these risks are covered by ECGC. Clear? Then it provide credit guarantee to banks which can provide loans and advances to exporter on liberal terms, right? It also provide the guarantee of credit to banks, okay, and can provide loans and advances to exporters. Then next, moving on to next point, is it provide loans and advances to exporter on its own or okay in collaboration with other financial institution. Now it says here ECGC provide loans and advances to exporter either by its own or in collaboration okay with all other financial institution, depending upon the situation, whether they need to collaborate or whether they can adjust by themselves. ECGC, whether they can manage by themselves, so they do it by on their credit assurance, right, based on their assurances. Then, or if it is not possible with them, then they will collaborate with other financial institution, right. Then ECGC provide credit guarantee, okay, credit guarantee in trading, okay, on behalf of the businessmen who borrow funds from banks and other financial institution in India, or it may be abroad. Okay, so it also provide credit guarantee for the trading on behalf of businessmen. Which businessmen is supposed to provide? The ECGC provide, right? Who borrow funds from banks, either banks or other financial institution. It may be in India or abroad, doesn't matter. But ECGC provide credit guarantee. Then ECGC also provide pre-shipment as well as post-shipment credit guarantee to Indian businessmen engaging in foreign trade. This is very interesting point. Now see student, before shipment and after shipment, okay, ECGC provide credit guarantee to whom? To Indian businessmen, those who are engaged in foreign trade. Okay, then ECGC covers political risk such as change in government policies with respect to foreign trade, okay, and even instability of government rules, policies, and even for the wars or internal unrest and so on. Okay, so it is a duty of like ECGC who takes certain responsibility and they are following it. Okay, so it means it covers political risk as well, right? So then it also covers commercial risk like insolvency of the importer, default on part of importer, okay, to make a payment and so on under this policy. Now it says suppose there is payment is not done by the importer, or he failed to make a payment on part of the exporter, or it may be importer, then it is the duty of ECGC to make a payment. Then also it also offers packing credit guarantee, okay, export production, financial guarantee and so on to Indian importer and as well as exporter. Okay, so we can say aim of ECGC is promoting international trade, right? Then the bank helps in promoting and financing export oriented business unit. Yes, the business which is related to export import, okay, it is the duty of bank to help in promoting and financing the export oriented business unit. Then bank also helps importers and exporters in completing various procedure, okay, in the preparation of important document relating to conduct of foreign trade. Okay, it is not only that duty of banker to finance or to promote the export oriented businesses, okay, but bank also helps for the exporter and importer in completing various procedures which are required or preparation of important documents relating to conduct of foreign trade. Okay, so then when an Indian company forms a joint venture abroad, the Exim Bank provides Indian company with required finance and to be invested in equity shares of the joint venture. So Exim Bank helps certain Indian companies, okay, also when they form a joint venture abroad, right? So that is the role, function, important or objective of ECGC. As we have seen, the ECGC provides protection against those risks which are not caused, okay, or which are not covered by insurance policy. And then it provides credit guarantee to bank It also provides loans and advances to exporter. It provides pre-shipment as well as post-shipment credit guarantee to Indian businessmen engaging in foreign trade. ECGC covers political risks such as change in government policies with respect to foreign trade, unstable government policies or wars or internal unrest, so on, under this policy. It also covers commercial risk like insolvency of the importer, default on the part of importer to make payment under this policy. ECGC also offers packing credit guarantee, export production finance guarantee, and so on to the Indian exporter and importer. Okay, and its aim is to provide international trade. The bank helps in promoting and financing export-oriented business unit. The bank also helps the importer and exporter in completing various procedure, preparation of important document, okay, relating to the conduct of foreign trade. Then when the Indian company forms a joint venture abroad, it also ECGC also help them, okay, in finance matter, right? And the bank also help importer and exporter in completing all the documentation process, okay, related to international trade. Okay, this is the something about ECGC, that is Export Credit Guarantee Corporation of India.